welcome everybody.
Welcome, welcome. It looks like we have most of the participants in attendance at this time. So let's just skip right to the disclaimers like we always do, and let's see what we can do.
All right. So as you know, we're going to be putting these presentations on about once a month. We want to share our thoughts on the digital asset space and what we're doing, what we're up to. But before we
Paul's going to do the disclaimers for us. Yes.
Before we dive in, all right. This presentation is not investment advice. This is not an offer to buy or sell any securities. The information contained herein is believed to come from reliable sources, but we can make no guarantee of its accuracy. Please check out our disclaimers and review the terms of use and service at our website, investwithwillow.com/disclaimer. All right.
All right. So let's rock and roll. All right. Here we go. Okay, so for most of you, you know
Before we jump in, just wanted to give everybody a quick agenda so you know what we're going to be talking about today. We're going to try to keep this concise and to the point. First, we're going to review some of the technical charts that we're seeing out there, this current price action that we've seen, and we'll go into some detail on that. Second, we're going to look at some different ways that we can add valuation metrics to certain cryptocurrencies to get an idea of, what are they really worth, or what are ways to start thinking about the value that they have. We'll jump into, after that, the DeFi space and TVL, or total value locked, just as another metric to look at growth and development of the space, and then sort of compare Ethereum and Bitcoin and what's going on in the DeFi worlds of each. After that, we'll look at Ethereum's roadmap and the scaling that's coming up and the implications that can have. And then some charts we wanted to share on institutional adoption and how the space is continuing to grow. And then we'll open it up to questions.
Okay, so let's start here. For those of you who follow our work, you know that we ground a lot of our work in the technicals. That's one aspect of how we see things. Paul, do we have control of this mouse?
Yeah.
Oh, good. Okay. So this company, Willow, started getting involved in cryptocurrency right around here. Paul started here, the company right around here, right?
Yeah.
Okay. And what you'll see is this chart represents Bitcoin and the price of Bitcoin. So you could see what we want to show you is this huge run up. This went all the way into late 2017. And then you see this huge drawdown. And these drawdowns, and we've said this before, because this is a new asset class, we consider it an asset class, though it's not officially considered an asset class yet. But you can see the drawdown here. What was this, 84%? Yeah, just 84% from 2018 all the way to 2019. So 84% of the value of your cryptocurrency went down, or Bitcoin. And then you can see it was chopping sideways for a very long period of time, staying in this trend line right here. Okay, so this is important to our work as well. So you can see it chopped all the way through. And so now you see this big run up we've had here, and now we're coming back down to this support line. When we say that you can't have a faint heart in this particular area, you can't. These drawdowns we fully expect until this becomes a widely adopted asset class, let's say. So this is not what we're seeing today. The 53% drawdown with Bitcoin isn't unusual to us. Now, what I will say is we find it kind of interesting, some of the comments that are made out there by some leading, let's say, CEOs of some companies that on their word, you see the charts or the prices of these things going down. Bitcoin, and for example, when Elon Musk tweeted something on that. So we find that as noise, and we're just going to keep going forward.
Right. There's a website out there, I believe it's called bitcoinisdead.com or something like that. Right. And it's just every article since Bitcoin's inception. That's a headline that says this is the end for Bitcoin or crypto. I mean,
so with that, I just want to say one thing. There is one country that has adopted Bitcoin as legal tender. That's El Salvador. If any of you know El Salvador, also their legal tender is the US dollar. So we question what other countries may follow suit and what impact that might be for the dollar long term, because that's one of our thesis for those of you following us. We feel that the dollars dominance as a reserve currency over the long term is going to weaken. And so when both Paul and I saw this with El Salvador, we said, maybe this is the direction.
This is the
first domino.
to fall.
And I think right here, Paul, I just want to mention our feeling towards Bitcoin. Again, we have said that we're not looking at really at this asset class, we'll call it, as a currency. We're more looking at it as an infrastructure, which is why Bitcoin, we would say, is not our favorite cryptocurrency.
Right. Bitcoin's really paved the way for a lot of this stuff, but when you look at utility, it really seems like some of the other projects out there might be doing, well, are doing arguably much better in terms of utility. But that said, Bitcoin is a scarce asset. So there is a strong case that could be made of here's the first digital asset really that's gained notoriety or adoption and has a finite supply that is hard-coded in. So there is this idea of a scarce digital asset that could potentially be a long-term store of value.
Yeah, potentially. So, and I want to touch to the point for those of us who were around in the 70s and 80s. You remember the company Wang? Wang was one of the first, companies to come in terms of technology. You don't know the name anymore because it went bankrupt. So we, in our work, always say, okay, how long will Bitcoin be on the top of most people's mind as a digital asset? How long, or will it have utility? And if it does, great, but we're always mindful of the fact that they're the first ones in the gate. And many times when you see some of the first entrants, you have to sometimes pause and make sure you're not married to a particular investment.
Right.
Yep.
All right.
All right, next one. Okay, so Ethereum, same type of thing. You can see here where we're at the, let me get this, sorry, Paul, where we're at this support line, and you can see drawdowns 90%, 68%, 68%, 37%. And now we're looking at a drawdown of about 60%. So again, I guess we have to just say we have to have ice water running through our veins because, and especially Ethereum, that is one of the particular digital assets that we feel very strongly about. You'll see some evidence of that going forward. Anything you want to add? No?
Just
Okay.
volatility. We expect it.
Totally.
I would say just don't get scared by it.
Yep. All right, next. Okay. Here we go.
This is a fun little exercise. We've been really trying to answer the question of how do you start to value digital assets, especially with all the speculation out there. What are some really tangible ways in which we can say, okay, other than speculation, what value is this digital asset bringing, or how can we start to look at it in a way that says, oh, look, there actually is utility behind this. People are using it. People are paying to use it. So one of those ways is through looking at the fees that are generated through the usage of different networks. And there's this website, cryptofees.info, that does a great job in aggregating this data. And as you can see, the #1 platform currently generating the most fees is Ethereum. The other notable thing on this chart is all of these pinkish colored highlights are platforms that are tokens that are built on top of Ethereum. So you can see as for the top 13 fee generators in the digital asset space, all but 2 are built on top of Ethereum. So these aren't added up in equal Ethereum. These are separate than the fees generated on Ethereum. So,
so even, and so let's just talk a little bit. You can see, again, we're looking at this as an infrastructure play, not so much currency play. And you can see that by Ethereum being 4.9 million average 7-day fees versus Bitcoin at 1.1. Again, it doesn't mean, or 1.2, that's roughly. Again, not that we don't like Bitcoin, but again, the whole thesis behind our work is that this is an infrastructure.
Right. Play. And one of the interesting,
one
of the interesting things you can do with this data is start to create sort of similar financial ratios to what we're used to in traditional finance. So knowing fees, one of the things we can look at is like a price to sales ratio, where it's the total revenue in traditional finance, it's the total revenue a company generates compared with the current value of all of its or its share price, right? So here we can look at token price or digital asset price compared with the fees or revenue, basically, that the platform's generating. to come up with some interesting valuation metrics.
Yeah, and again, I want to point something out. This is an unregulated industry, okay? So these are numbers that we believe are viable. However, it is not like a publicly traded investment or stock where it has all kinds of regulations around reporting. So, okay, next.
So one benefit to that point, though, is that as transparent blockchains, anybody has the ability to really dive in and see, okay, is this data correct?
Yeah.
So, but that's again where one of the core tenets of this space is personal responsibility and taking it upon yourself to do that kind of due diligence if you're going to make an investment in the space instead of trusting somebody else.
This is important because once it's in the system, it's there and it's verifiable. So unlike, a publicly traded company, you're depending upon the company to report the information correctly. And we all know that there's been some fooling around with numbers over the years. So, okay. All right, fundamentals. What we really like about what we're seeing more and more, and this isn't from one of the large accounting firms, this information
this is a blog post, but it to us represents a really useful thought exercise on, okay, how can we take digital assets and then maybe do like a quarterly earnings call, or what would that look like to bring the traditional finance quarterly earnings to something like Ethereum in this case, or any other digital asset, and just what are the different metrics that we'd want to track that provide value and show really the growth of these networks and what's happening on top of them.
Yeah, so you can see transaction volume. So and that's not transaction, you going out and buying Ethereum. This is literally companies or individuals doing actual transactions on the platform. That's up 2,000%. I mean, 2,000% from the first quarter of last year to the first quarter of this year. I dare any of us to find a company that is growing that much. It's just not happening. Yeah, these are insane. Transaction fees, okay, yes, to 20,000. I mean, this is, the supply of Ethereum only up 5%, which is nice. You want to speak to any of this, Paul? It's pretty self-explanatory.
One of the really interesting things on this one is what's called wrapped Bitcoin. And the idea is, how do you take Bitcoin and put it on Ethereum's platform so that you can do more with it, right? Because the Bitcoin network really is structured so that all you can really do is send Bitcoin from person A to person B, and it does a fantastic job at that. But if you really want to then start finding decentralized ways to lend that out, or borrow against your Bitcoin or earn yield on your Bitcoin, people have found a way to basically bridge from Bitcoin to Ethereum and what's called wrapped Bitcoin, and then use that wrapped Bitcoin on the Ethereum network that's still tied back to the original. So just the fact that there's been a 9,000% growth in the amount of Bitcoin that is actually wrapped and put on Ethereum network is pretty astounding. I had just read it's something like 1% of Bitcoin's supply is currently wrapped and hosted on Ethereum currently, which is pretty amazing.
NFT art supplies, pretty interesting. Sales. Yep. So interesting. This could change the face of art and many other areas. And we hear a lot of discussion around being able to put art on these platforms. More and more discussion on that. It's pretty interesting. All right.
So I wanted to talk a bit about TVL, or total value locked. And basically what this TVL means is, if I have Bitcoin or Ethereum or any other digital asset and I lock it into a smart contract where I basically no longer have I have limited access to it, but it pays me back in yields or something, but it's hosted on a smart contract now doing its thing. And so this just shows really interaction of people with these smart contracts in the DeFi space.
The way you can look at this is it's like as if you put your money in the bank and then the bank lends it out to a commercial entity. So it's kind of, that's the way you can look at this, I think.
And so Bitcoin's Lightning Network is basically a way to make Bitcoin more friendly to use as a peer-to-peer sort of payment mechanism. Currently, it's just sort of really cost prohibitive for an individual to do a small transaction on the Bitcoin network. The fees are just really way too high to make that viable at scale. So the Lightning Network is a technology solution that, through something I believe called state channels, it's a way to make it so that those fees come way down and people are able to transact smaller payments back and forth to each other or with specific merchants. Right now, that network, it has about $45 or so million locked into it. And really, I just wanted to compare that with the total value locked in DeFi built on Ethereum, which is over 100 times higher and currently is securing closer to $47 billion.
Billion.
So,
versus, yeah,
right,
billion.
to our core thesis of utility, to us, this is just an infrastructure. To us, this is just a sort of a really clear use case of, wow, this Ethereum network really is putting up a lot more utility, at least at this stage. I wanted to touch briefly too, we wanted to talk about scaling on Ethereum, because right now, Ethereum's using the same proof of work consensus mechanism as Bitcoin. Both of them only process something like 17 or 7 to 17 or so transactions per second. But what's happening in Ethereum is that this beacon chain already launched. This is the move from ETH1 to ETH2, which makes the network basically scalable, so that instead of 14 transactions per second, theoretically, you could get up to hundreds of thousands of transactions per second. And so that's all in the roadmap over the next year. The beacon chain was launched. There's something like over 5 million Ether currently locked in that contract that is inaccessible at this time until what's called the merge happens, where we move from proof of works consensus to proof of stake consensus.
Just so you know, you can stake your current Ethereum and earn, what is it, 7%?
It's around 7%.
Yeah, 7%. We've not opted to do that because we like liquidity. Once you stake it, you're locked. And we rather
and until
not.
This merge happens and goes live, you really can't pull your Ether out. But just goes to show that there's a lot of trust in this system, because 5 million Ether, which is billions of dollars, have been locked into that contract. So once that happens, this thing called sharding then comes, probably in 2022 down the road. And along the way, the amount of transactions that can be processed per second increases astronomically. In the meantime, there's these layer 2s that are being built that move Ethereum from 14 to about 5,000 transactions per second. And then once sharding is viable after the merge in ETH2, probably sometime in 2022, we should be able, the network should be able to scale to over 100. Now, to compare that to something we're maybe more familiar with, when you look at a company like Visa and their current payment rails, they have the ability to process somewhere around 70,000 transactions per second. I don't believe that they've ever had to utilize that, but that's the competition, so to speak, right? And so what does this mean for Ethereum from a tokenomics standpoint, or the economics of that token and how it works? Another way to look at valuation is that currently Ethereum is inflationary. There's about a 4 to 5% inflation rate per year, meaning that the supply increases year over year. What these changes do, the shift to the merge and ETH 2.0, basically bring that down to close to zero, moving it from an inflationary asset to a potentially deflationary asset, and then basically capping out its supply, making it a fixed supply asset.
Yeah. So, I mean, just let's put this in different terms. Essentially, they won't be issuing as much Ethereum, which essentially would be bullish for the price. Okay?
Right.
So there's kind of an inverse terminology that Paul's using here. Deflation does not necessarily mean that the price of Ethereum is going to deflate. Yeah.
Right, and to compare, right, Bitcoin has a fixed supply, so there will never be more than 21 million Bitcoins. A lot of hard money people really like that, because there is no way to come in and mess with the supply or issuance, as opposed to fiat currencies, where government or central banks can really by decree say, okay, we're adding an extra zero
Let's just
to the
keep the
balance
printing
sheet.
presses going.
Right.
But also like just, I think it's really great to just point out here, Dogecoin, of course, I'm sure many of you are hearing about this, but unlimited supply. They can just supply, which will really do nothing for the price in the end. I mean, yeah, speculation and all this, but to us, it's a lot of hobby.
Devalues, right? Because if and for us in the United States, we're in sort of a privileged position where we have strong institutions for the most part. We have strong legal systems, and we have an army that backs things up. But if you're in a third world or a developing country and you have a government that you really can't trust, and they are consistently debasing their currency, where 1 week it costs you 10 units of your currency to buy bread, and then the next week it's 20 and then 30. This provides actually a safe math-based alternative where you don't need to trust that government. Instead, you're trusting the math behind one of these protocols.
That they're adopting this stuff,
right? Assuming you have internet access too, because that's the other major piece.
That's a major piece. Okay.
But if you do, it's a potential escape or just avenue to hedge yourself against that manipulation of your currency.
Okay, let's see. Oh, this is good. So one of the things Paul and I pointed out a while ago, when you start to see the big accounting firms start to study, look at, begin to consult in, so on, when you start to see those companies getting involved, there's more viability to what you're seeing. And so this is a study, I think, is this one by Price Waterhouse? Yep. This one? Okay. So you can see the financial service industry is already, that when you're looking at the leaders, 46% is being led by financial services. That's a big deal.
Yeah.
Industrial production, manufacturing, 12%, energy, 12%. Healthcare, 11%. I think that could be substantially higher.
They definitely could. Yeah. To put some of this in perspective too, I was listening to a podcast earlier today that it's just a piece of information worth sharing. Since the 1890s or whenever Western Union was created, to wire funds or move money literally by horseback cost about 3% over 130 years ago. And it took days, obviously, to settle. Right? Over that 100+ year period, what innovation has really happened in the banking industry? It still takes days for cash transactions to settle on the traditional banking rails, and it still costs 3% or so to do that.
Even though they're benefiting from the float, obviously.
Right,
so,
right. So,
but this makes it
the
such
whole
that they can't.
finance industry is literally ripe for disruption, and I think that's the low-hanging fruit that we'll see a lot of the initial development pick up in first, but then the rest to follow for sure.
So this stuff, when we start to see things coming out of the accounting firms, we definitely pay attention. So, all right, now this is good.
Right. So this is another metric that just shows companies making over $1 billion in revenue. How many of them are seriously considering and jumping into adopting blockchains? And we're looking based on 600 global companies surveyed by Deloitte. 46% of them were.
Again, another accounting firm doing the research. So 46% of companies with revenue greater than $1 billion are actually looking at or working or with this technology. This is good.
Right. So this is an interesting way to look at it from Price Waterhouse again. But how far along are companies with blockchain? You can see 32% or so of the 600 companies that they surveyed are in the development phase. 10% have pilots. And this is a year or two old, this study or this survey, so I'm sure it's a little further now. But again, to just show that corporations around the world are taking this seriously and really stepping in.
Yeah, this survey's 2.5 years old. So where are we today? I would argue probably greater. So this is something we'll watch for from Price Waterhouse, see if they have any kind of updates here. But 15% are live. Okay, so this isn't just like taking a dart into a certain degree. We're still in the early stages, so we're in the Wild West still. But it's happening.
And then I just wanted to share this chart. This is based on job postings for blockchain or blockchain related job postings by different companies. And you can see that it's heating up.
Those of us in New England, it's pretty hot here.
Yeah. All right, so I am
questions.
going to stop sharing the screen.
Okay, and questions.
Let's see. Okay, let's see what we have. So a couple of questions that came in. One is talking about, is it better to have a fixed supply in your coin for your tokenomics? Generally, yes, but I wouldn't say that it is absolutely necessary, based on the idea that if you have a completely supply that can just continuously be inflationary, unless it is consistently consumed and used, you're just basically inflating the supply and your value is disappearing. So
yeah. I might differ a little bit from, I always like fixed supply.
Yeah.
I just, it does help to support the price in the long run. You can just correlate this to when you see companies on the stock market, when they're having a secondary offering, you always see the price of the stock in the secondary offering pulling down the original price. So I think fixed supply does, and or, if it's not fixed, at least it's like Ethereum where it has this amount that's built into it.
Right. I'd say supply is only one piece of the tokenomics equation and how the protocol actually uses that token, because sometimes you could have an inflationary supply that, is creating new tokens, but if the protocol is burning those tokens or taking that supply off the books so that nobody has access to it, it could level out. And so there's different ways to approach it. One of the questions we got was, will you continue to support Bitcoin given the apparent position of the Chinese government? And so that's a great question, because there's a lot of, I feel like, news that comes out around China and what they're doing. And just so everyone's aware, every time the price of digital assets goes up, there's always China FUD, or fear, uncertainty, and doubt, that comes out. And news media and outlets love to pick this stuff up. And I think China has banned Bitcoin like 15 times in the last year, according to the news outlets anyways, which is...
We should probably
show
everybody
right.
It's not just in the last year, it's been in the last 5 years.
Several years, but they're always banning it. Really, it's news media taking a complex topic and boiling it down to one liner that really doesn't get to the heart of what's going on. Yes, China made some rules that allowed certain merchants, they couldn't do certain settlement in cryptocurrencies, but nowhere in their rules have they banned individual use of these currencies. So
that we know
of anyways, right? Right. The second piece there is China's working on their central bank backed digital currency, which they're going to want to use. So there could be something behind that of, okay, let's get everybody on board with that. They've come down recently on mining, which I would argue is a net benefit for the entire proof of work, any proof of work coin that uses that kind of mining, because up until now, something like 60% of the mining infrastructure has been in China, and now it's being more distributed around the world, which is great. In my opinion, that's a fantastic outcome.
Yeah, better in the long run. But let's just talk to Bitcoin, because again, I would say it's not our favorite digital asset. It's one that we definitely are behind, but because we see other areas, the infrastructure, as we've been pointing out, are a little bit more interesting. So let's see how Bitcoin does over the next time period. It'd be very interesting, I think. Let's see. Okay.
How can crypto environmental costs be curtailed to make it viable as a sustainable investment? So the first thing to know is that the proof of work mining, about 75% of the electricity used to power that is already from renewables. The reason being, most of the mines are built next to hydroelectric dams, and in their off-peak hours, that electricity goes at extremely cheap rates to secure the network, really, or for these miners to use. So I was trying to think of any other industry that uses 75% or more renewables currently, and I've been having a really hard time coming up with any industry that is better than that. I mean, I know there are some countries out there. I think Costa Rica is one, right?
They're pretty good.
There's some companies that do it, right? And there's some countries that have been able to achieve really high numbers, but it's this very, very small minority.
Yeah, so I mean, hey, it definitely isn't an issue, but from what we're seeing, there's no question that there's a lot of renewables here.
Right. There's some interesting conversations going around, and I think a lot of it just has to do with this whole idea. We talk about a lot of information asymmetry, where people have unequal access to information. Basically talking about like, oh, I only want green Bitcoins. It's like, well, Bitcoins are fungible tokens, meaning that one Bitcoin is one Bitcoin. It doesn't make any difference really where it comes from. So there's really no way to delineate that. But
so I think it's interesting because this subject around environmental impact and such has been on the table for a very long time. But I think with the last tweet that Elon Musk made around Bitcoin, you could see counter arguments to that by it. We always look at some of the forums. There are absolutely counter arguments to that was not based on fact, but rather on who knows what.
Right.
So, I mean, so anyway, that's just for whatever that's worth. Okay, so what do you feel the new JP Morgan coin link, what do you feel the new JP Morgan coin link and offer will do for the industry? If anything, I would say, it would end, the fact that they're going to be issuing a cryptocurrency in our mind is just giving yet more viability to the whole asset class, if you will. As to exactly what this is going to do, we don't know.
Okay.
But all right, Paul just looked it up.
Yep.
He just looked it up.
JPM coin is basically like a stable coin that JP Morgan's offering, similar to USDC, which is a Coinbase Circle backed stable coin. It's just another way to, so one of our core thesis too is that most people won't know that they're ultimately, 5-10 years down the road, most people won't know that they're actually interacting with blockchains.
No idea.
It's that back end infrastructure that's going to be replaced.
Yeah.
So
it's just like you don't even know how you're interacting on the internet. I mean, you have no idea what's behind that.
Right. So a company like JP Morgan doing this is realizing, wait a second, if we adopt this type of infrastructure and use these blockchains and these coins to facilitate payments and settlement, we're going to save a ton of money over the long term because settlement's quicker. We have, a much more visibility into the audit trail of how things are moving around. From a business perspective, it makes a ton of sense to.
And I like that they're offering something because in our opinion, that's just going to just give more,
Right. So there's a lot of talk too around like this winner take all strategy where people say, oh, Bitcoin's going to come in and completely destroy traditional finance and, blow apart all these other companies. And to us, it's like, that's just not really what's going to happen. You're going to have both exist in this world. This isn't a winner take all kind of thing. It's going to be what makes sense for each person. Do I want to be my own bank and, not have to use any institution? I'll have that option to do that. Arguably, I already have that option right now. Or do I not feel safe being fully responsible for all of that? So I want to be able to call somebody with a help desk or say, how do I do X, Y, Z, or I'm having trouble with this. And this is the kind of solution that will be provided for anybody who wants that too. So both of those worlds.
The moral of the story is you better have a millennial hanging around you because they know what they're doing. But there's maybe some clarification here on this question here. Do you accept qualified assets in this space? Do you know it?
So all I could think of on that would be qualified assets would be things that are determined as securities under SEC regulations. I mean, that would be my guess.
Or if you can clarify what your question is, actually, I don't think we should even speculate because I mean, qualified assets, right now we're dealing, so if you have a second and you can type what you're specifically asking there, or maybe some clarification, that would be great. Let's see. Or if you can.
So the majority, just to talk a little bit about securities and what digital assets are versus what securities are. Securities are obviously regulated, highly regulated. They meet certain, like the Howey test, certain criteria that says, yep, this is a security. Many digital assets do not fall or meet the requirements to be a security or fall under that regulation, but some of them do. Some of them mock very similarly what securities do. So they pay dividends.
Got it. Thank you very much. Yes. Okay. Yes. The answer. Okay. So thank you. The clarification here is, do you accept retirement accounts in this space? And the answer is yes.
Right.
Now it's a little bit slower of a process to set it up, but yes, it's there.
Right.
Yeah.
And so that leads us to a good place to close, I think. Willow Crypto, unless there's any more questions.
Does anybody have another question before we sum this up? We really, I like this presentation because it was a little less a little less technical, and actually is starting to show you how there's some utility in this space now. So, and what Paul and I are going to do in our work, hopefully for the next seminar, is to be able to show you actual cases where it's being used. So you can start to register, like if back when the internet first started and somebody said, go ahead and search such and such in the and the URL is this and whatever, and it's .com, you're like completely confused until you actually put it in the system and you see what comes up. So hopefully we can give you some real examples of how this is actually being used, and then maybe put it to life. Yeah, there's many of them. Yeah.
Be a fun
presentation. And you would do us a great favor if you would send ahead of time maybe some thoughts, ideas on what you might want to see for the next.
Absolutely.
Yeah.
Anybody who has any specific questions, or if you'd like us to dig into any of the topics, because there's so many, feel free to shoot us an email. We'd love that kind of feedback to make these presentations, hit what you want us to hit, hit on what you want us to.
Exactly.
So really quick, Willow Crypto is is a separately managed account offering that it's a product we offer to all of our clients. If you're interested, it's a managed basket of digital assets or cryptocurrencies that you as the end client directly own. So if you'd like more information on that, please reach out.
Excellent. Thank you
all
very
right,
much.
Thank you, everybody.
All right. Have a nice day, everyone.
Bye.
Bye.